What's up, world? Welcome back to the HPT Cross High Level Summary Data Review. And today in this video, we're going to be breaking down the month of February. I collect data on this strategy every single day. It's literally changed my life. I think a lot of traders fail, not because they're stupid or incompetent or, just incapable. I think traders fail because they don't collect data and they don't analyze it. Trading is a very simple numbers game if you can learn the numbers. Once you understand the numbers, you follow the numbers. You build what I like to call an equation. Today in this video, we're going to be talking about that equation. We're going to be talking about a very simple strategy that has performed extremely well over the last 6 months. And yeah, I can say that, or you can look at the data. Over the last 6 months, we have taken this strategy 107 times. Meaning this very clear and specific strategy presented itself 107 times in the last 6 months. What's crazy is on average, there's 21 trading days a month. We'll round it to 20. In 6 months, that would mean that there was 120 trading days present. And this strategy presented itself 107 times, right? So this isn't like a super specific strategy that doesn't present itself. On the contrary, it presents itself around 80% of the time. Actually more. That data is leading more to like a 91%, and this strategy presents itself around 90% of the time. And out of that 90% of the time, it has an 82% win ratio, right? So today in this video, we're going to be breaking down the month of February and the win ratio in the trades that we took. So over here, you're going to see on every high-level summary, there's just a data. It's a data report, right? A high-level summary is meant for somebody to look at and get a high-level summary of the data that's in the data report, right? So on top, you're going to see a high-level summary, and this is just going to give you all the important facts of all the data that we've accumulated over the last month. So basically, what's the setup? HPT crossover, month tested, February, 85% win ratio, and then it breaks down the strategy, right? We're trading off a critical level, which is open print. We're trading a moving average cross, which is the 5 and the 21 EMA, the EMA cloud, right? Red to green. And then the entry criteria, which is a red bar or a green bar that gets ignored, right? And below is a beautiful example of this, right? Red bar, ignored, off open print, long, stop below the red bar, right? Very simple strategy. You can explain it to a 2-year-old. It's got to be simple. If it's not simple, then the game becomes extremely complex and it's very easy to fail at that point. And I think we've all been there. We've all been at that point where we've been programmed to think the harder it is, the better it is. Oh, if it's hard, then I'm earning the money I'm trying to obtain. And that's actually retarded, right? But we're programmed to think, hey, work hard in school, do all your homework, clock in, work overtime, you make more money, right? The society conditions us to think that way. Where the market opportunity presents itself and you can put on as much size as you want and make insane amounts of money, right? So it's a mindset issue. We have to change our mindset, right? And this is one way that we do that. So there were 20 trades that we took in the month of February, and like I said, 3 of them were losses. All right, so as you go through these high-level summaries, you're going to see, right? It's just very simple, breaks down everything that we do, and you're going to see an arrow where I went short. Now, for this trade to be checked off as a profitable trade, it has to move at least $1 in the desired direction, right? I trade SPX, so honestly, I don't need to capture a dollar move on SPY. I shoot for more 60, 70 cents, 80 cents, but I will hold. But what I'm getting at here is $1 is definitely appropriate. It is suffice. It is enough price to constitute a winning trade, right? And then I got some notes. We took some really good trades here. You're going to see a lot of very similar trades. And in reality, that's exactly what we're doing. We're trading the edge that works for us, right? It's a very simple edge. Anybody that wants these high-level summaries, click the link below, and I will email these to you directly, straight to your inbox for free. It's crazy how I offer these and so very little people sign up for them. And it just shows me that you're lazy, right? Like if you don't want free data emailed directly to your inbox for free, then you're just lazy and don't expect to ever become a good trader, because data is key. I would not be up here preaching data every single weekend if it did not help me. Data helps me, helped my team, and it's going to pave the way for massive success in the market. Why? Well, because think about it. If you're a day trader, how do you ever expect the levels to size up, right? How do you ever expect to take those $10,000 setups or $1 million trades, right? To do that, you need massive conviction, right? Like you need a lot of confidence to put $1 million on a trade. How are you going to get that confidence? Through data. There's no other way. What are you going to do? Trust your gut for the rest of your life? Now let me ask you, is that what you've been doing? And if it is, what does your equity curve even look like, right? Data completely changed my life, and these high-level summaries were the key to it. All right, here's a losing trade right here. Very choppy day, you're going to see here. But what we did was remain patient, open print. Price comes up, rejects it, sells off. We get a green bar here, ignored. We're in short. Yeah, it was coming right into EOD and previous day high, but I chose to follow the strategy instead. It was a losing trade. You're going to see here those same requirements the next day ended up providing us a fantastic trade, right? So once again, you're never going to have a strategy that's perfect. I mean, 85%, that's pretty damn good. Like, that's pretty good, guys. And I've been studying strategies for a long time. Usually an 85% win ratio or strategy only pops up very rarely. This strategy pops up over 90% of the time. So, once again, open print, established, price rallies above it, comes down, we get a red bar that's ignored on this candle. What does ignored mean? I had somebody ask me. Ignored means the highest point here on this red candle got disrespected, which means this candle broke the high of it. We do not wait for the candle to close. If you wait for the candle to close, your risk reward will be skewed. So do not do that. Who wants to wait for the candle to close anyways? I don't. I never want to wait for the candle to close. I don't give a damn. Once this candle breaks the top of that candle, I'm in long. Enough said. Stop below. Because I know, and this is once again what data and practice does for you, I know that once sellers allow price to beat them, well, once this seller, think of it like an arm wrestle. When you're arm wrestling somebody, once somebody gets you down to that, like, what is that? That, like, 80% angle, there's no coming back, right? Oh, you could come back, but it's a very low chance. Same exact concept over here off the RBI, GBI. Once this red candle gets blown out, meaning this candle breaks the top. If the top here was 4018, once this candle does 4019, you're in long. That's it. Don't care. In long. I don't care about closing. I don't need none of that. I know everybody on the internet says, wait for the candle to close. I don't. I have a strategy that performs 85% of the time. I do not need the candle to close. It is what it is. Beautiful trade right there. Beautiful trade. I just want to point that out. Let's go over another loser here. This was a good one. 3 losers. That's it. So this is the third one. I think. All right. So we had news here at 10 a.m. You can see large news candle, large wick right here. But I was still willing to long the market here. Moving average, open print, red bar ignored. I'm in long. Stop below that candle, right? We get stopped out. Do I care? Absolutely not. Why? Because I maintain my risk right. And then look at this trade. Same exact day. Same exact day. We get another RBI. Red bar ignored. I'm in long. Captured. Beautiful trade. So, guys, go through this high-level summary. Oh, here was the last loser right here. Go through this high-level summary and analyze it. Dive deep into it. Look at all of our high-level summaries for the last 6 months. Those are on the Discord. So if you want to look at all the ones for the last 6 months, you would have to join our team. But what I'm getting at here is you are only as good as your ability to trade your approach. That means under any circumstance you pull the trigger, right? Now, to do that correctly, you need to be very clear on what your edge is. So this is where the data comes in. How could you expect to repeat something consistently if you do not know it inside and out? You have to learn it, you have to study it, you have to become it. This is what the data is for. Learn the data, study the data, gather evidence that the strategy either works or it doesn't, and then rinse, repeat, right? Consistent input, consistent output, right? Newton's third law. For every action, there's an equal and opposite reaction. If your reaction is inconsistency, that means your action is inconsistent, right? You need to tune, you got to tweak that input to get the output that you want. That concept right there has changed my life entirely, right? So guys, I love you. I hope you guys enjoy this lesson. I could go through all the trades, but I think it's better if you do, right? I think it's better if you dive deep into this high-level summary. I put the link in the description below. Just click it. If it doesn't open, just click refresh, right? Don't be retarded. And continue to push yourself, right? Be the absolute best version of yourself. You only get one life. It's time to become the absolute best. Click the links below. I'll see you in the next lesson.